How is everybody doing? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. Today we're going to be talking about how does a bank differentiate itself? Well, it does that by becoming a niche player. And I saw this great article in Bank Director that talked about this very subject. And we're going to pull this article up here real quick. And so this says magazine exclusive, finding your lane. So community banks can offer niche lending to differentiate themselves from competitors and diversify their portfolios. But these credits require specialized knowledge to ensure sound underwriting. So let's jump into this for a second. Robert Tallerman considers himself among the lucky who get to live in Cape Cod year-round. The region, which makes up the hook-shaped peninsula in Massachusetts, is beautiful for its miles of coastline, beaches, and waterways. The natural beauty is the economy of the Cape and the islands, says Tallerman, president of Cape Cod 5 Cents Savings Bank in Hyannis, Massachusetts. It's all that coastline and beaches and ponds and waterways. It's why people come here to vacation or retire here. But the majority of the buildings at Cape Cod use specific tanks rather than hooking up to a sewer system. That means the area's water is vulnerable to nutrient pollutants that can seep into the sandy soil. To solve this issue, towns are now requiring building owners to connect to a sewer system. It's a massive but necessary undertaking that will span decades and potentially cost property owners tens of thousands of dollars. To alleviate the financial strain, $5.7 billion Cape Cod 5, a subsidiary of Mutual Bancorp, created a business line offering financing to commercial and residential property owners who need to pay for the sewer connection upgrades. Our job is to serve our market, to understand where our market might be unique compared with another market, and help our clients, both consumers and businesses, be successful, Tallerman says. It's a nice way to align with our clients' needs, reach prospective new clients, and it's good for the region. It's also an example of niche lending, an area that community banks enter to boost loan demand and avoid concentrations. But competing in a niche lending line also requires internal expertise of the segments and industries that the bank is looking to target. That can mean more specialized underwriting and knowledge. A niche lender has the credit risk management in place that is tailored to that niche, says Claude Hanley, a partner who leads the financial management and regulatory practice at the consulting firm Capital Performance Group. A niche lender knows exactly how to assess the collateral involved in the loan. They have a sense of who will default. They have a pretty good idea of how to repossess the collateral if necessary. They know the players involved so they can qualify a borrower fairly quickly. So understanding the business line. So historically, community bank lending has been concentrated in commercial real estate. At the median, these loans made up almost 36% of portfolios at banks with market capitalizations of less than $1 billion in the third quarter of 2024, according to an analysis of publicly traded banks by the capital markets firm Janney Montgomery Scott. This median is about 28% for institutions with market capitalizations of at least $1 billion. At the same time, the Federal Reserve warned in November of 2024 that CRE delinquency rates had reached their highest level since 2014. Additionally, banks face significant competition. Last year, there were about 4,500 banks in addition to roughly the same number of credit unions, according to federal regulators. And that's not to mention non-bank lenders, which have captured almost two-thirds of non-real estate commercial, 79% of residential mortgage, and 59% of consumer credit lending, according to data from Kiefer, Bruyette, and Woods. Overall, KBW expected loan growth to be around 5% this year. All of this has some bankers considering how to carve out a business model that ensures the long-term viability of their institution. Anyone can distinguish themselves in the market by saying, I'm a low-cost producer, or we provide the best customer service, says Robert Stark, president of the Equipment Finance Division at $3.1 billion Stearns Bank, a subsidiary of Stearns Financial Services in St. Cloud, Minnesota. But we live in a hyper-competitive industry, and there are a lot of banks or independent finance companies. So how do you set yourself apart? You can become a niche player, he adds. So in general, niche lending requires a bank to gain enough knowledge and expertise to make credit decisions quickly for the targeted customers. This means knowing that specific sector's regulatory environment, ebbs and flows, key players, significant risk, collateral, and its real sale value, and much more. Frequently, this entails originating commercial and industrial loans and is a way to bolster that portfolio. However, many lenders will also look to make CRE loans to companies within their targeted niches. So Let's cruise down here for a second. Um, and because I'm not going to go through this entire thing verbatim. So banks can deepen their niche relationships by offering other types of services, such as treasury management, wealth management, or credit cards that commercial customers may need. At the same time, these services can be a source of fee income for niche players. Niche lending can also be more profitable for a bank. The average loan yields will be higher because there is likely less competition. So there will be less chance of prices getting bid down to absolute minimums. Um, and then it talks about, building a client base. Perhaps the most important mantra of any niche lender is this: know the segment that you are trying to reach. Um, And then it goes into the more being well versed in the intricacies of an industry is more important beyond just establishing a client base. It's also a critical part of ensuring these loans are properly underwritten and reducing the likelihood the portfolio sours. To avoid potential issues, the bank should develop a deep knowledge of the target verticals, regulation, economic cycles, and competitive landscape, not to mention regular monitoring of the individual borrower's financial condition and collateral valuations. And then it talks about, mitigating other risks. And then it talks about, but at the same time, the bank has to be careful not to get too heavily concentrated in one business vertical. Yes, that's very true. And then that's basically the end of it. So, all right. So I wanted to give everybody the gist of this. So now here's the very good article here, just basically explaining this, why or why not a bank may not want to, get into a particular niche, some things to consider. But here's my take on this. One of the things I find most interesting about the banking business is that most consumers out there, they look at a bank and they think, well, a bank is a bank is a bank. They're all the same. No, they're not. I could look around the area and I could see 20 banks, and I could see 20 very different banks that focus on a lot of different stuff. Some banks might be big on residential lending. Some banks might be bigger on commercial. Some banks might do a lot of SBA lending. Some banks might be more focused on small business or medium business as opposed to large businesses. Some banks could, in the commercial realm, they could be very, different. So like, in other words, one bank might be all about commercial real estate. Another bank might be more about C&I lending, commercial and industrial lending. One bank might be all about commercial real estate, but they may have a niche in construction lending. That may be their focus. Like, for example, I knew a great bank here in the PA area that was called Green Valley Bank. And this bank basically they developed a niche in construction lending, and they charged people more. Now this is going back to, 2010, say 2010 to 2018, in that time period. Now, they were basically a startup bank. They had grown up very quickly, but they took advantage of an opportunity because it was a moment in time when a lot of banks, particularly the bigger players in the local market, were not doing construction lending. And so there were very few eyes. So if you were a developer, or if you had a building project or something you wanted to get done, they were one of the few options. So they were able to charge more for their services. They were able to charge, higher interest rates and a little bit more in fees. I mean, it wasn't hard money. They weren't price gouging people, but they were definitely charging more than what they could have gotten, say, in a normal market for a normal pricing. So, like, in other words, say if interest rates were 8%, they were charging 9%. If the normal fee was 1%, they might have been charging 1.5%, that kind of thing. So, but they had their customers in a very particular situation where it was basically like, well, you could, hey, if you don't like our terms, you don't want to, hey, by all means, go somewhere else. But again, the borrower knew, well, there's not many places or alternatives for me to go, so I, pretty much have to take the deal. And they built this niche, and it was an extremely successful niche for them. Then they basically built the bank over the course of 5, 6, 7 years, 8 years. And then they basically sold the bank to another bank in the local community and made a great return, and things worked out great for their customers and everything else. But I think that was a perfect example that suited this particular article, talking about how a bank can create a niche for itself that differentiates them in the local market. But local marketplace or the national marketplace. And I think niches are great. Again, if you have a particular niche, maybe again you focus more on CNI lending, which is more lines of credit. Maybe through the CNI you get into more something what's called asset-based lending, which is more, lending to manufacturers, providing them with lines of credits that's based more on their inventory, work in progress, that kind of thing. And those can be great niches. If you can work those niches out in the local marketplace, it could be fantastic. And it's also, I would also like to point out, it's very interesting how different parts of the country have very different niches. For example, in Texas, you may have banks that specialize in providing financing for oil wells. Up in North Dakota, you might have banks that provide financing for companies up there that are mining and pulling out certain minerals and things out of the ground. So again, in different parts of the country, you could get all kinds of stuff. Here in PA, we have shale. So you have a lot of oil companies, a lot of people coming in, especially in the northern or northwestern part of the state. Heading over more toward Pittsburgh, a lot of companies came in. We had the big shale boom for a number of years where these, refiners were coming in and basically saying, hey, we want to put in, pull the shale out. Pennsylvania also has a lot of coal plants, so, you might want to specialize in financing that type of industry. So there's just a lot of, the point is that there's a lot of great ways that banks can differentiate themselves out there. You just got to go about making sure that you have, you develop the right expertise inside. You don't develop too much of a concentration of it in your loan portfolio, and you understand the ins and outs. Like when the regulators come in, when your auditors come in and they look at what's going on, that you are basically able to let your expertise shine, that you give them a lot of comfort that what you're doing in that space and that you're an expert in that particular area, and that you have no problem dealing with it should something go wrong. So again, great article. Love this topic. Love talking about, this, again, this kind of falls into that realm of bank strategy. How could banks do this or do something else, and what might work or what might not work. And there are literally dozens of examples out there of this kind of thing where banks have developed, niches for themselves. Either in the past or current day. So many great things to take a look at there. So, but with that, I'll wrap up with that and basically say, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we're on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I love getting back to everybody. And remember, please check out some of the other content on the channel. I hope everyone has a fantastic day out there, and I will see everyone again real soon. Thanks a lot.